I want to emphasize that if the airplane is used, which means flown, or stored, which means hangared or any places on the tarmac, or registered, any one of those, it can be subject to California sales and use tax. Good morning, everyone. I'm not going to give you the webinar that you came to see, the offsetting the operational costs of the jet, but because of technical difficulties, that presentation is not going to start today. The additional bit of randomity that's going on in our lives, because we had this switch and I had to put this presentation together for you on the fly, I decided we're broadcasting it live on Facebook also. So stand by. You can laugh at us if you want. You're going to watch us reacting to things that maybe never happened before. So here's where we start. The first thing I'm going to do is show you a video. The second thing I'm going to do is tell you that if you have any questions, hit and you're on the webinar live, send them to Kelsey and she'll get them to me. So here we go, I think. Hey, I heard you want to save a boatload of tax on your vessel purchase, or an aircraft purchase, or a vehicle purchase in the state of California. If you want to do that, you need to contact me. I'm talking about you saving tens of thousands, hundreds of thousands, even millions of dollars in tax. And we have done thousands of these, thousands, plural, thousands of these. If you want to be part of that and you want to save all that money, the call is free. Reach out to us. What have you got to lose? One of the best ways for you to get to know us is to click the link. And we never know whether it's up or down. Just depending upon whatever platform you're using, follow the directions. Click the link. Get the free ebook. That's the beginning of a new relationship between you and I, so that you don't have to pay any tax on your vessel, aircraft, or vehicle purchases. And I guarantee it. So I'm stumbling through this, and I'm going to tell people again, because I see people signed on that weren't on a second ago. We are streaming this live on Facebook, and we are not going to be able to deliver the offsetting the operational costs of your jet. There's some technical difficulties with our person who was going to be the presenter. So I'm going to give you what is normally my seminar presentation. So here we are. What do you see? You see a Christmas tree. What's missing from that picture? Take a good look. Send in your answers to Kelsey, please, right now. I'm not going to make you sit through some dead space. What's missing is presents. When you come down the stairs, or if you're in a single-story house, you walk into the room where the tree's at, and you don't see any presents, and you're a kid, what do you think? What's your first impression? It's not good. So I'm going to tell you my story. And the reason I tell this story first is that you'll understand my motivation about why I'm in the tax avoidance business. Okay, so enjoy this. I was about 14 years old. Christmas morning, I'm the second oldest of 8 kids, or there was a bunch of us. We were a big family. And normally when we came down Christmas morning, there'd be stacks and stacks of presents. So I come down the stairs and I look at it, and no presents. The other thing that was strange is hanging in the tree were little white envelopes all over the place, as if they were like ornaments. And it made no sense to me. Later, I found out that my father was in a dispute with the IRS. And in the first or second week of December, I'll never really know, the IRS went into his Christmas club account and took all of the money out. So imagine if you were the parents of 8 kids and you didn't have anything to give your kids. Imagine how that must have felt. I know it must have been embarrassing for my mom and dad. And that is why I'm in the tax business. I think the people who did that are gutless pukes, absolute gutless pukes. We were a large family. My father wasn't trying to want to run away from him. He wasn't going out of communication. And their solution was to steal the money out of his Christmas account. And they knew it was a Christmas account. I don't care where they tell me that they didn't. I won't talk to them and they won't talk to me. But that's my motivation. That is why I fight so hard to make sure that you don't pay taxes to the state of California, even though my dad's issue was a federal one. Okay. When you look at this, this is the reason that California finds every transaction of every aircraft to be taxable in the state of California. Doesn't sound right to you, but look at that. This is the fraud penalty. It says any purchaser of a vehicle, vessel, or aircraft who registers it outside the state of California, and it says for the purpose of evading the taxes, and the reason that what they use that you decided that you were only reason that you registered out of California was to evade the taxes because you never filed a California tax return. Now, obviously, if you're a resident of Ohio, you would never think about having to file a tax return. So let me explain to you how this works against you. First of all aircraft transactions are considered taxable by the state of California, regardless of where they're registered, if the aircraft enters California at any time during the first 12 months. There's no way, if you're legitimately an out-of-state resident, that you can know it. And most residents of California don't know that that exists. And the way that California gets at you is by applying this fraud statute. So not only do they get to charge you the tax, they add on a 50% penalty. So if you owed $10,000, it would be $15,000. If you owed $100,000, it'd be $150,000. And if you owed $1 million, it'd be $1.5 million. So this is the statute that California uses to determine that regardless of where it's registered and regardless of where you think it's supposed to be taxable, they get to make it taxable. Now, the way that you're going to get caught in California is if your airplane happens to be at an airport on the same day that one of their property tax guys, which is administered by the counties, goes to the airport on that day and writes down the tail numbers, and they find you. Okay. I'm going to go through how California decides whether you're a resident or a non-resident, because you don't get to make that decision. You do not get to decide that you're a non-resident of California. Even though if you're a resident of Ohio and you go to your Ohio CPA and he tells you you're a non-resident, if he tells you you're not, it's probably based on his think and his mindset and the way he's been trained to think of everything from an income tax point of view. Well, guess what? California doesn't use an income tax definition of resident or non-resident for the purpose of establishing sales or use taxes, which I will try to use the correct term, a transactions tax. Also, if you notice at the top of the slide, our new logo, and that's been to convey the message to you that not only do we do this for airplanes, we do it for vehicle purchases, large motorhomes, really expensive cars, and vessels. So here's some of the definitions. If the aircraft was purchased by a California resident, and remember that it's defined by California law for the purpose of California taxes out of the Motor Vehicle Code. Second step, if your aircraft was subject to property tax in California during the first 12 months of ownership. Do you realize that you can be subject to property tax in California even if you're a non-resident? You may not realize that, but that's the reason that I'm giving you all this information. Okay? They send around to all the airports, they being the property tax administrators, someone to write down the tail numbers of all of the aircraft that are there, and they have some control over the hangar owners and require them to give the tail numbers of the ones inside. So even though you may feel it's a needle in a haystack proposition, the enforcement people can find you. This is the other part of the definition. And please look at the slide. The capitalized OR doesn't mean a city in Oregon called used or stored. I want to emphasize that if the airplane is used, which means flown, or stored, which means hangared or any places on the tarmac, or registered, any one of those, it can be subject to California sales and use tax. Okay, I see a couple of other people have just signed on, so I'm going through, and we're on Facebook Live. I'm going through a California sales tax presentation because we've had some technical difficulties getting hooked up with the people who were going to deliver the offsetting the operational cost of your jet. So I'm trying to make sure I deliver something of value to you rather than just saying, oh, we're not going to do it. That's not in our nature. So back to the presentation. And Kelsey will occasionally, when more people sign in, she'll come over and remind me to do that. So if she gets in front of the camera, you'll know why. The following are evidence of residency for the purposes of vehicle registration. Now, before I show these to you, I need you to put on a different hat. And by that, I mean change your viewpoint. I want you to decide that you're a brand new person working for the tax collectors, okay? And that you're going to use all of these little pieces that we're going to show you to make yourself a hero, to turn everything into a taxable event. If I just showed you all these and you were wearing your hat as an aircraft owner or aircraft buyer, you'd be saying that doesn't apply to me, that doesn't apply to me. So you'd be rejecting the information I'm trying to give you. So in order to receive this information so it has a valuable lesson for you, okay, wear the hat that you're a brand new employee for the state of California and you want to be the hero. And you're going to use any of these items that I'm going to give you as a bullet to make things taxable. Little A, address where registered to vote. You're probably not going to register to vote in California if you're a resident of Ohio, unless you're trying to support a specific socialist agenda that's quite prevalent these days. So without getting off on the politics of it, we can set that one aside. Little B, location of employment or place of business. How could you use this statement to make something taxable? Think about it. Let's say that you work in Ohio for a company that audits a company's books. You get sent to San Francisco to take an audit that's going to take you several months. What's your location of employment at that time? What's your place of business? You could refuse to look at that the way that I believe it was intended to be used and instead pervert it so that you could collect the tax and make somebody a resident. Little C, payment of resident tuition at a public institution of higher education. You may be under the impression that if you're an out-of-state, a non-California resident, that you pay non-resident tuition, which in general is higher. But 3 years ago, when I had a daughter who was going through applying for schools all over the country, I discovered that she found that there's a website where kids from different states can trade their residency requirements so that they're paying the resident tuitions even though they know that they're non-residents of that state. So that could trap you, and there's no way you could know this if I didn't spend the time to take you through it. Little D, attendance of dependents at a primary or secondary school. How could that happen to you? Let's say you're the same resident of Ohio, you're married, you have a couple of kids, and then you get a divorce. Happens all the time, right? And your wife moves to California and your kids are going to school here. Guess what? You're a resident of California for the purpose of California's transactions taxes. Little E, filing a homeowner's property tax exemption. This will catch you. If you have a home inside California, and your inside of California CPA will probably advise you to file for this homeowner's property tax exemption. He's made you a resident of California for the purpose of the transactions tax. Are you beginning to get an idea how these little items in the DMV code can make things taxable for you? We're going to continue. Renting or leasing a home for use as a resident. Let's go back to you're the same resident of Ohio. You had a company, you sold it, you made millions or hundred millions of dollars, and you decide to bring your family to Orange County Airport and keep your kids in the Disneyland hotel because you want to give them a couple of weeks at Disneyland. Where are you living? You're renting a home. It is your residence. Doesn't matter how you think about it. Remember, you're thinking about how you can use these items to make yourself a hero and make things taxes. You don't care about the effect that it has on people. You only care about getting yourself promoted or looking good to your superiors. G, declaration of residency to obtain a license or other privilege or benefit not ordinarily extended to a non-resident. Could be used any way you want. H, possession of a driver's license. That's a black and white. You either do or you don't have one. But if you have a California driver's license, even though your CPA in Ohio says you're not a resident of California, for the purpose of the transactions taxes, California considers you a resident of California. So here's the fun one. Little I. Read it. Read it to yourself and then text me what you think, how you could use that to be a hero. Other acts, occurrences, or events that indicate presence in the state is more than temporary or transient. Somebody send me something. How would you use that? I encourage you to communicate with me. You'll make this whole event more useful to you and the others that are watching. Somebody's got it. I would use it any way I decided if I wanted to be a hero. I wouldn't care about how it affected the taxpayer, okay? I would do whatever I had to do to make it taxable. So if that doesn't scare you, nothing will. Here's another thing. If the board, now this is an old slide, so because we did this off the top of our head, we didn't have time to change that. It's now called the California Department of Tax and Fee Administration, the CDTFA. But look at what it says. Discovers the owners or shareholders of an out-of-state company are California residents. The BOE at the time, the CDTFA is the right term now, can decide to apply a 12-month requirement. And I realize that I'm kind of doing this slightly out of sequence because you don't know why this resident or non-resident is important to you. Trust me, I'm going to get there. The important thing for you to remember is you don't get to decide, your out-of-state CPA doesn't get to decide whether you are or you aren't a resident of California. The state of California gets to decide, and I've shown you the gauntlet that you have to run through to make sure that you can support that you're an out-of-state resident. So I'm going to take a little short segue, and I'm giving you this because you need to know something. You need to know that, because I know a lot of people are a little bit worried about people who legally avoid taxes. They kind of associate it in their minds as being a little bit of a snake oil salesman. It's absolutely wrong. If you're really interested in what the courts say about it, that's what this portion of the presentation. Understand what I'm about to tell you and have courage and faith that this is the truth. The Supreme Court proclaimed that every citizen of the United States has a right as well as an obligation to avoid taxes. So if you're overpaying your taxes, you are not a good citizen, regardless of what certain socialist politicians say about fair share. This is what the Supreme Court of the United States has to say. This is what this is when the Supreme Court decision and the case that it was actually done. Look at the date. It's 1934. My guess is not one of the people currently in politics has ever read this decision, ever. And there are certain people who have certain political viewpoints that even if they read it, would just reject it. So you are in danger. This is a furtherance of an opinion by a federal appellate judge, learned hand, who, if anybody's ever been to law school, you're going to know that he's a source of good decisions and great writings, and he's a great teacher. Here's what you need to know. Okay. Over and over again, the courts have said that there is nothing sinister in so arranging affairs as to keep taxes as low as possible. Everyone does it, rich and poor alike, and all do right, for nobody owes any public duty to pay more than the law demands, regardless of what Joe Biden says during when he was running for vice president 2 or 3 election cycles ago. It's not about fair shares. It's about you're not being a good citizen if you overpay your taxes, if you fail to recognize that you have a right to use the law as it's written to legally avoid taxes. What is against the law is evading taxes. I'm absolutely certain that all of you know someone who brags, or wink wink, has done a evasion process. In California, I hear it all the time. I'll just register it to my brother's address in Oregon. I'll register it to a Delaware corporation. If you remember back to the first slide about the fraud statute, you'll know now, because you've watched this event, that that's not true. That is tax evasion. And why do it? It's inexpensive to do the right way. You get a letter from the state of California that says you've legally avoided, and they affirm it. So it's not a question of whether it's illegal or not. Okay. Don't get your tax advice on the tarmac. If you're a vessel owner, don't get it from your buddies at the marina, especially not after 2 beers and 3 margaritas. Just do it the right way. And if you want to know the right way, call me. The call is free. 916-691-9192. Now I'm going to go through some definitions for you so that you have an increased understanding of how all this tax situation works. And then I'm going to get into the exemptions, which is what I'm sure you're all holding your breath for. Okay. So first thing you need to know is sales tax and use tax are both transactions taxes. They're at the same rate. They're based on the county where you either hangar your airplane, park your vehicle, or marina your boat. Okay. And in California, the tax is always based on the gross receipts. What that means is if you pay $1 million for something and you trade in something for $500,000 so that your net cash outlay is only $500,000, California still attempts to tax you on the gross sales price, the $1 million. Is there any questions at this point? I'd like some feedback from you. Here's the actual definitions out of the law about sales tax. Sales tax is imposed on the retailers for the privilege of selling tangible personal property at retail. The tax is measured by the gross receipts from retail sales. The obligation on the sales tax is on the retailer. Think of it as the seller. In California, a sales tax is a very narrow definition. It has to be delivered inside of California and out of the inventory of someone who has a California seller's permit. Every other sale is, by definition, a use tax transaction. And the important thing for you to know is the difference is whose the obligation is to pay the tax. If it's a sales tax transaction, the tax is due by the retailer, even if he doesn't collect it from you. So be aware of that. He has the right to collect it from you at the time of the sale or refuse to make the sale if you don't want to pay the tax. Okay. Use tax is imposed upon the storage, use, or other consumption in this state of tangible personal property. The obligation to pay use tax is on the buyer. And I'm presuming that most of the people who are on this webinar and on Facebook Live are thinking about being a buyer of either an aircraft, a boat, or a vehicle. Sales tax and versus use tax, this, if you see in that line, if you purchase MTE, which stands for mobile transportation equipment, and I'm going to define that next couple of slides. If you're thinking about buying an airplane, just substitute the word airplane. If you're thinking about buying a power boat, substitute the word boat. If you're thinking about buying a motorhome, substitute the word motorhome when you see MTE, and this will communicate to you more quickly. Okay, so if you purchase mobile transportation equipment from a California dealer while it is located inside California, the dealer owes sales tax. However, the dealer can reimburse himself from you. Here's the actual definition of MTE because I don't want to give you a term without defining it. And you'll see that it's a lot more stuff than airplanes, boats, and vehicles. Railroad cars, locomotives, buses, tractors, truck trailers, dollies. It's quite a large stuff. It does not include passenger vehicles. It doesn't mean that you cannot use the exemption to legally avoid the tax on passenger vehicles. It just means that passenger vehicles are not classified as mobile transportation equipment. And that is a statement, or excuse me, that MTE is a definition that only exists in California. That's the other reason why an out-of-state CPA is going to give you the wrong information, not because he intends for you to fail, but because he doesn't know. It's not part of his training. So if you purchase an aircraft for use inside of California from an out-of-state dealer, it's a use tax transaction, unless the out-of-state dealer has a nexus within the state of California. There's the definition of nexus. Typically, let's say that you were thinking about buying a Cessna. You went to one of the local Cessna dealers. They arranged the sale for you, but you picked it up in Wichita because it was a new plane. It's still a use tax transaction in most cases, okay? So just be aware that if you're dealing directly with a manufacturer, that it can be a sales tax transaction or it can be a use tax transaction. And if you're not sure, call me. The call's free, 916-691-9192. What do you got to lose? If you purchase an aircraft for use inside of California from an individual, you're liable for the use tax. You must file the tax return to support a claim for an exemption or pay the tax. A lot of people will tell you to wait until California sends a bill. This is wrong. The state doesn't have an obligation to notify you in a timely manner. So if you're in a use tax transaction in general, the amount of time that you have before you have to file is about a year. It's a much more detailed definition than that, but just think of it in terms of 12 months. If you don't do it within 12 months and you haven't been notified by the state of California, a lot of people will tell you to wait until the state notifies you. Do not do that. You have an obligation to file the tax in a timely manner, and that think about it in terms of 12 months. If you get some correspondence from the state of California before that, on the cover letter of the blank tax return that they're going to send you, it'll tell you what they think is the due date. Do not ignore that. If you ever get one of those and you're not sure what to do, call me, 916-691-9192. The call's free. If you want to be able to qualify for most of the exemptions that are available, always think in terms of taking possession of the property while it's located out of California. It doesn't mean that you can't find an airplane or a vessel that you want that's already located inside of California. What you need to do as a condition of your purchase offer, make it conditional on them delivering it to you outside the state of California. If it's an airplane and it's in California, have them take it to Oregon. That's generally the safest place to take possession on the West Coast. If you're looking for a boat and you find one in California, all you got to do is have them take it outside the 3-mile limit. Okay, outside of California. Always request an out-of-state delivery. Now, if you look at that slide, it says always seek professional guidance. Whenever I write that on the slide, I mean you should call me at 916-691-9192. The call is free. You have nothing to lose. So now we're going to go through the exemptions, and I'm not going to take you through the part of the presentation where I went over the past exemptions because it's been a long time. So what we're going over is the California state use tax exemptions for aircraft, vessels, and vehicles. Again, note the change in the logo. This is a fairly new thing for us. Airplanes, motorhomes, or any expensive vehicle, and vessels. And just because that's a powerboat doesn't mean that we don't do sailboats. These are the 3 current exemptions that are primarily used to legally avoid the transactions tax in the state of California: the principal use test, the interstate and foreign commerce, and common carrier. So we are getting ready to go into that. Does anybody have any questions at this point? Just type it in if you do. Don't worry about interrupting me. The principal use test is a test period that is designed for people who are making no business use of their aircraft or don't want to go through the extra step of providing business support. Or if you're just going to use your airplane or vessel for personal. Okay, and we use this primarily for vessels, and for airplanes, you decide whether you want to use it or not. It has 2 steps. The first step is out-of-state possession. Remember, always think with that. Okay, and then there's a use and storage requirement. And now you're going to understand why I went through the resident versus non-resident, because it really has a large impact on this test. Here's how the basic summary of how the principal use test works. The aircraft must be used and stored outside of California for more than the first 12 months of ownership. It means you must take possession outside, and you must be able to document and support that it stays outside of California completely, never entering California for the first 12 months. Don't try to sneak it in and sneak it out because you've failed the test. This is if California agrees that you're a California resident. Now you're going to understand why you need to be able to think with the non-resident part of it. If in fact the ownership entity is a non-resident, and you got to go through all of those things that we listed, okay, it only has to be outside of California more than half of the time. So I'm going to tell you how we apply that. Okay, we still start with an out-of-state possession. But all you have to do is show that your aircraft or your vessel or your vehicle remained outside of the state for more than half, and we raise the bar to 60% of the days of the first test period, which the easiest way to remember it is think in terms of 220 days out of the first year. You have to be able to show that at no time during that 24-hour period was that property ever brought inside of California. Now, there's a secondary part of this test period, and it's based on if it's an aircraft, it's flight hours. If it's a vehicle, it's miles traveled. And if it's a vessel, it's nautical miles traveled. So you have to, hang on a second. Kelsey's giving me a note. Okay, I see more new people have signed on, so I need to let you know that we had some technical difficulties and we're not able to deliver the offsetting the operational costs of your jet. And I'm doing a special customized Facebook Live presentation as well as this webinar. If you have any questions, please type them in, send them to Kelsey, and she'll get them to me right away. Thanks, Kels. So back to this. So I think you understand that the 220 days, which is 60% of the first 366 days, okay, that means 366 days, each 24-hour period, it is always at a location that you can support by documentation, is outside the state of California. Okay. The secondary part is from the day that you start this test period, okay, you have to track if it's an airplane, the flight hours, if it's a vehicle, the miles traveled, and if it's a vessel, the nautical miles traveled. Okay. And that also, that look at your particular form of property has to remain above 60%. The law says 50, I raise it to 60 as a margin of error. Especially for you pilots, it's designed to protect you from yourselves. Why? Because most aircraft owners are classic A types. They got to the point that they could afford to purchase this time machine, this airplane, this jet, whether you're talking about Gulfstream 650s or a Piper Mirage, okay, it doesn't matter. You did something very successfully to do that, and you probably did that by not following the rules. You probably did that by coloring outside the lines or doing it your own way. So I have to protect you from yourself. Secondarily, if you're a pilot, by definition, you're constantly pushing the envelope, aren't you? So this is why I create those 10% margin of errors. And generally, that's enough to overcome the resistance that the state of California's auditors have. So now you understand the principal use test is if you're making personal use of it, there's no business use involved. You start with out-of-state possession, then you document and support that it was outside of California for 220 of those days at a minimum. And you have, depending upon what kind of property, you have a usage requirement. Airplanes are flight hours, vessels are nautical miles traveled, and vehicles are miles traveled. Now, that may seem a little bit, well, how could you, if you have it outside the state, how could you be traveling inside of California? So I'll give you an absurd example just to make the point. Let's say that you buy a boat, you take it down to Ensenada, and it sits there for 7 months, so it gets up to 220 days. But it was always in the marina, okay? So the only amount of miles, nautical miles on that boat from wherever you started to Ensenada and back will be the part of the test period that's out of state, okay? So let's just pick a number and say that's 1,000 miles, nautical miles. Then you bring it back to California, you get a slip in Marina del Rey, and you travel between Southern California and Northern California sufficient amount of times. Let's say you go to San Francisco and back twice a month. You're going to wind up with more nautical miles traveled probably inside of California than while it was in Mexico. So that's why I'm bringing this up. This is very important. You have to understand there's two pieces to that test, and most people just talk about it in terms of storage days, and that's not complete information. Here's the most important thing about the residency status. Just remember that you're not the one who gets to decide whether you're an in-state or an out-of-state resident. The state of California, the auditor, whose job it is to get the tax money from you, that person is going to make the decision. You must be able to prove, I like to use the word support. Kelsey, we need to change that on this slide. So change it to support. You must be able to support without a shadow of a doubt where the aircraft was located and when title was transferred and throughout the test period. Okay, so you may have some questions in your mind. Anytime you have a question, call me, 916-691-9192. The call is free, okay? And I'm going to tell you this story about any, as we go through these exemptions, any of the burdens of proof. If you don't treat them like the district attorney just showed up at your house with a SWAT team, and they're going to shoot you if you can't support this. That's how serious you should take it. I am not trying to say that the state of California would kill you over a use tax or sales tax situation. I just want you to understand how important this is for you. A second way of avoiding tax on aircraft is the common carrier exemption. If you're not someone who has their own certificate, most of this will apply to you. If you're someone who has your own certificate, this it's kind of redundant to you. And if you're not sure, call me, 916-691-9192. The call is free. This is the one test that allows you to take possession inside of California, but I'm going to still give you an option not to do that. And this will become really clear as we get to the next form of exemption. Okay, so always remember in the back of your mind that you need to be thinking with, never take possession of your airplane while it's in California, because it gives you options to support the tax exemptions. Okay. The test period for the common carrier test, it starts with first operational use, which means the first time the wheels go up. That's when you start the test. First day, you start logging the flight hours. Within the first 12 months of operational use, more than 50% of the aircraft time or the flight hours must be flown in common carriage. And for the purpose of what we're talking about, when you see common carriage, think with Part 135. Okay. And again, we're going to raise the bar to 60% for all of the reasons that I told you in the past. Now, if you're someone who buys an airplane and then leases it to a charter company, what that does is it puts the charter company in control of all of the requirements to collect all of the documents and get them to you so you can get them to us so we can do our quality control work. So I suggest that you take the terms right out of our agreements and put them into your lease agreement with the charter company. The state of California defines a common carrier flight as a flight that is flown under Part 135, and that means they're carrying passengers or cargo. Deadhead or reposition flights, even if they're billed to the customer, they don't count. They're still flown under Part 91. So make sure that you totally understand this. And if you have any questions about it, call me at 916-691-9192. The call is free. Now we're going to talk about the commercial interstate flight hours test. In terms of aircraft and in terms of our clients, we use this close to 99% of the time, and you're going to see why. All of the restrictions that apply to the principal use test in regards to resident or non-resident and outside the state of California for X amount of days are not part of this test period. This test period is based on only hours of usage if you do the qualifying steps first. And these are extremely important. Okay, you need to do these, and you need to do them in the order that I'm going to give them to you. Okay, the steps are: first, you must take possession out of state. Where have you heard that before? Second, you must meet the state's definition of first functional use before it enters California the first time. And if you're not sure, call me, 916-691-9192. The call is free. Okay. First step, out-of-state possession. Second step, first functional use. Once you've done those two, and let's back up a little bit. If you're worried about how to do the business support, that's what we're for. In fact, the secondary service, not a secondary service, a secondary benefit is that once you've engaged us and you're trying to do this commercial interstate flight hours test, every time you get ready to make a flight, if you have the least bit of unsureness or fogginess or anything about this, call your consultant that works in our office, tell them what you're getting ready to do, and that person will tell you exactly how to get the business support. So the definition of first functional use is an interstate flight, and the city that you fly to has to be for business. And depending on what kind of an airplane, there may or may not be a passenger required. A passenger for sure is required if it's a jet engine or a turbine engine, or even if it has a piston engine and it has more than 6 seats. Let's put a passenger on that flight. Okay. The third step is you bring it into California. When you land in California, you buy fuel. That fuel ticket will have a date, a location, and a tail number on it. That date starts a 6-month-long test period. Okay? And the test period is based on the total amount of flight hours that you fly, starting with the first flight after you've landed in California the first time. So it does not include any of the flight hours involved in the qualifying steps. All the flight hours that happen from the out-of-state possession to the first functional use to possibly you stop and do some training, any of that stuff that you do before you enter California, those flight hours are not part of this test period. The aircraft must be flown in interstate commerce for more than half of the flight hours during the 6 months following the date of first entry. And of course, we're going to raise the bar to 60%. So let's hypothetically say you flew exactly 100 hours during the test period. Okay, 60 of those flight hours would have to be flights that crossed a state line, and you have business support that supports that the location that you flew to was for business, and that's what we're here for. We'll hold your hand all of the way. Okay, more than half, and of course we're going to raise it to 60%. Now, the good news is in the regulation, there's no minimum hours set. We have legally avoided tax on business jets with as little as 15 to 20 hours on them because this entire test period is based on the flight times. Get that into your head. You could literally have your airplane sitting in California every night of the 6 months. And I'm going to give you an absurd example. Let's say you get up every morning and you leave John Wayne Airport and you fly to Las Vegas for business, okay? And then you fly back the same evening. If you continued that pattern and those were the only flights that you made was back and forth between Las Vegas, and you provided business support for every time that you went there, for you being in Las Vegas, the aircraft would be inside of California every night of the test period. But because the test is based on flight hours, it's 100% business usage. I hope that helps. First functional use is a term that was created by the state. It must happen before entering California. If you don't do the first functional use, which is step 2, before you enter California, you haven't done the proper qualifying steps, and it's fatal. It means no matter what you do, even if you flew it 99% of the time for business after you entered California, if you don't do all of those three things, the out-of-state possession, the first functional use, it's not going to work for you. You haven't met the test period. And I've already told you that the definition of first functional use depends on what type of aircraft you purchase. How are we doing for time, Kels?
10 minutes.
Okay. So here's some caveats that I'm going to give you. The flight hours must be for the business use. It can be 100% of the time flown in Part 91 or a combination of Part 91 and Part 135, provided the Part 135 flights cross a state line. And this is another thing that's important. If this is written right in the regulation, the term commercial is not limited to a for-profit business. So if you do a lot of flying for a 501c3, and we're going to show you how to support that, okay? That's business use. That's commercial use according to this regulation. So the news just keeps getting better, doesn't it? Are there any questions? Anything at all? Ask me anything. I don't care if it's about the current baseball season, what football team. Please communicate with me. I really, really enjoy that. Give me some feedback, whether, even though this was something that was brought up at the last minute, how we're doing on providing you with the information you need. Please subscribe to my YouTube channel. Go on any email that you get from someone in my office, and the links to do all of that are built right into them. Okay. Please do that. And Kelsey's rushing over here to make sure I do something. Terry, you asked me about ferry flights for maintenance. I think you were talking about the interstate commerce test. The only piece of bad news is anything that has to do with training or maintenance is specifically excluded from a business use flight. But we know how to teach you how to turn those things, advise you how to turn those things into business flights. Those are one of those things that you should just check with us beforehand by calling 916-691-9192. Private foundation use only. I think you're asking me about the 501c3 stuff. I don't, most universities are 501c3, as most schools are, and I don't think of them as private things. So no, if it's a 501c3, a recognized 501c3, we can help you make that be business support for the interstate commerce. I love it. I love the questions. If you have the question, 25 or 30% of the people on this broadcast have the questions. For those of you on Facebook Live, just direct message us. We'll get you your questions answered. I promise you. Or you can just call me at 916-691-9192. The call is free. So that's pretty much it. I apologize that we couldn't get you the offsetting the operational cost jets, the operational cost of your jet. We had some technical difficulties with the guys on the other end, and we jumped in at the last moment. I'd like some feedback from all of you about how we did, not whether, I know it was valuable to you, what you got out of this, how you're going to apply it, and any other questions or comments. And if you didn't like something, tell me. I can handle it. I'm a big boy. I'm in sales. I've experienced rejection every day. You won't hurt my feelings, and I won't cut off communication with you. The only way you can end communication with me is if you die. That's my policy. I will communicate to you until you die, once you communicate with me. We like to provide free information. We have a series of YouTube videos and instructional videos. You could go on my website. That's at Aero Marine Tax Pros, AeroMarineTaxPros.com. There's videos, there's links, there's information there. It's pretty much all of that is free. And if you have a question about it, please call me. I'm going to give you my phone number, 916-691-9192. There it is. Now you can actually look at it. I forgot that we added this slide. Great job, Kels. All right. So as far as I'm concerned, that ends our presentation today. If we don't get any more questions in the next 30 seconds, I'm going to end it. Bye-bye. Please call me, 916-691-9192, or you can email me.